Hello members, it's LA. It's February 8th. This is our weekly review where we try to take a look at what happened last week, what it portends for the coming week slash weeks, and then also a quick look at the portfolio. And if you've been following these markets, they've been having these huge moves up and down. And on the year they're flat, and basically they're flat since about the middle of December. And you can kind of see that if you just take a look at the charts. If you go way back here to what, December 5th, you made a high back on December 5th. And matter of fact, if you pull this back to November, middle of November, we've basically traded sideways since then, with a lot of gyrations between, right? And if you're trading and you're not careful, you're totally getting chopped up here. With these huge moves up and down, right? It's chop city, so to speak. Overall, nothing's changed, right? In between, a lot's changed. Last week it was up. The week before it was down, and vice versa. For the last 9 weeks, it's been that way. So, if you're trying to trade this, your timing has to be pretty good, or you've really got to have some tight stops, which itself is problematic in that, with volatility, stops tend to get chopped up. And so, what happens is a lot of people end up taking, if I go back to the chart here, a lot of people end up taking these stops and saying, okay, I'm tired of getting chopped up. I'm just going to stay with it, whether I'm trading it long or whether I'm trading it short. I'm going to expand those stops to way out here somewhere, either end, and I'm just going to let it rock and roll. Well, if you're on the wrong side of that, that's a problem. If you're on the right side, well, it turns out it'll work. But that's always the crux, right? Which side are you on? So let's take a look at what the fundamental technical picture looked like. If I think about it from a quick review, we had the Fed speakers, and basically they really didn't say anything that different. We had a couple talking about, more dovish, and a couple being more hawkish. The other thing that happened last week that was notably a change was the fact that the oil rallied significantly. And if we take a look at oil, you can see how it came off, those lows, and it came off with a nice big charge up with some volume. That volume tailed off as it came back up to test. Now, if you look closely at what's happening here, we essentially have, well, first of all, we had a retest regen here, and that one regened higher. Excuse me, failed to regen lower, so it broke higher. That puts this thing, in a sideways range trade on this time frame, right? On the daily time frame is sideways now. The more difficult spot now is what happens on the higher swing point low. So as we come back up, it tries to get to that higher swing point low here off of this bar, and that trade, or that attempted trade, right, is very difficult to get over. And so if I take these lows, like in this case it's 2053, I'm using the USO. If I take that low, we almost got to a 2029. We're coming back up to try and test again as we ended on Friday. So there's a chance in my mind that we could see this test right into this bar. Will it get up and over it? Well, how long has it been since we tested, right, this bar? In other words, when we broke down here, we got an immediate, I believe we actually got an immediate test. Let's make sure of that. 2055, and I just said it was 2053, right? Yeah, so it got an immediate retest regen and regenerated lower. As we come back, it's going to be hard to get back over that on the first trip back up. So my take here is that oil has made its big move, 20% off the bottom, right? 6.5%, 7% last week. And as you come back into the spot, this is probably where the sellers should show back up. And nothing really in a supply situation, nothing really has changed. Maybe there is a little, quote unquote, a little bit more demand, but there is just a huge oversupply out there. And so, to see this market trade up and over, although, the emotions can drive things, but to see it trade up and over and stay over on any kind of an extended time frame, right? If we go out to the weekly, for example, to get up and over this level and to stay over it, it's going to be tough. And so my take is probably nothing's changed. This market's going to trade lower. If true, that's going to put pressure back on the S&P 500. And one thing that's different, that's a good thing if you're bullish, is that now the lows are way down here. So this thing can trade in this range, and it's really not going to change much on the S&P 500. In other words, we're not going to see the fear come back in unless you see it start trading way down here again, breaking down even farther. And that probably isn't going to happen in this time frame. So what does all that mean to me? Well, it means that oil's going to trade in a range, right? That range is probably about there, potentially about there. It's going to trade in a range. It's going to do that for some number of weeks, and then eventually try to break down farther, or finally put in a real base on a longer term time frame. That says oil is not going to be a plus or a minus in a huge way as it has been over the last 3-4 months. So oil is basically going to go to the background, and it's going to be kind of background noise for the most part, more than likely. And so that's the way that looks to me. The other thing that happened last week on a technical picture that I think is very important is that stocks tested lower here. And so if we highlight this, and I'm using the S&P, and it's a good proxy for all of them, you tested here, the volume on the test was lighter than the volume back here on the lows, just slightly, I believe. And so if I look at that number, it's 40. If I look back here, it's 40. If I look back here, it's 44. And so when we test lower on lighter volume, right? Reverse, go straight back up to the top to test the tops. These tops and the test on Friday. If you look at the volumes there, and I'll just run across them, 39.3, 33, 41.7, 38, and then 42 on Friday. So you tested the lows with less volume, reverse, come back up to test the highs, you fail. I mean, this was a failure at the highs, right up here, got over it, traded back under it. That's a failure, but it failed what? Just on price. It did not fail on volume. And that suggests that it's going to try again, and it's probably not going to pull back that far. I'm looking at the top of this bar as potentially the pullback area. That's about 2050, and then an attempt, either a pullback into here and then an attempt, or an immediate attempt to get back over these highs. Why is that important? Well, as we know, this is the range, right? And that range is within the larger range. The breakout, whichever side now, is going to be significant, because now you have the potential to break out on multiple time frames either way, whether it's up or whether it's down. And so that is significant, and that's something we need to be aware of. If we get a break over here that can stick for a bar or two, then we have the potential to break quite a bit higher. And matter of fact, if you take these ranges and just assume a range breakout and forget everything else, 2064, the lows are basically this one, is 1988. So that's 76 points roughly. So if you add 76 to this, that gives you about 2100. If you take the larger range, it's even more. So, we could trade on the upside 2100, 2130 or so on a breakout to that side. And conversely, if we break to the downside, we could trade down to 1910 or so. So we could get a fairly excuse me, 18, I think it is. 1980, yeah, about, no, 70 points. They could trade us down to about 1910. If you take the larger one, it could trade you into the 1800s. So we could get a fairly large move on a breakout if, in fact, we do get a breakout. And we're close. And the structure is, it's not quite there. It's going to take one more bar on the weekly. If I bring the weekly across, and I'm talking about a breakout to the top side, this high is 2093. You got 2, 4, 5 bars. If we don't get over this week, then we set this as a swing point high, and then you have the potential break of the highs. 2 here, 1 there, and then that one would also double on the weekly and give us the potential for multiple swing points on multiple time frames on the weekly, and could lead to a larger move higher. And so the structure is almost in place on the upside just as on the downside for a larger move. And in fact, it's already in place elsewhere. For example, if I look here at the NASDAQ, you've already got a swing point high here. And so that thing that we're looking at on the S&P 500 has already formed on the NASDAQ. And so this big range that's in place right on the NASDAQ, that big range has a swing point high, which would be breaks of multiple swing point highs on multiple time frames, upside or downside at this point. And taking the numbers on the NASDAQ, you got 48.14 on the large range, you got 45.47 on the low end. So that's what is that, 270 points, 260 points. 260 off the low would get you down to 42.80, which would bring you way back into what? To that big, basically into this high volume lows high. And if you take it the other way, you could travel 5,000 plus, which does what? Takes you all the way back to the 1999 highs. And so, the structure is in place already here to take us either way, and to take us either way in a larger way, which is, of course, significant. That same thing is true for the NASDAQ, and it's true for the Russell as well. If we look at the Russell, swing point high here at 1221, and if I look at it on the weekly, you can see the swing point highs as well. You've already broken one, fell back, and actually did it break both? 1212, 1213.55. Yeah, it did. 1213. So it's actually broken it already on the NASDAQ. On the Russell. Which is a different twist, right? Because there you'd only be breaking out on one time frame, and you'd finally be confirming a break here. Yeah, this just looks like a sideways mesh. So it makes me, actually when I look at this, it makes me put less significance on this, because you broke them here, you were unable to stay over them, you were unable to stay over a retest regen, right? Traded back down below it. Now you're back in there, so a breakout here is a weaker breakout than it otherwise would have been. But in general, the upside certainly has more juice, shall we say, as a result of the way these things are starting to set up. If in fact they do break higher, we're going to have more juice to the upside. And then if we take and look at the S&P, we definitely will have more juice here if this one starts to break. So I think this is the key one. This is the one I'd be focused on, and this is the one that I think will tell us the most if and when it actually breaks to the upside. Okay, let's move on, because I'm spending a little bit too much more time here than I expected. What are the negatives? The spike was sold on Friday. That's a negative, but we had that higher volume. The other negative, in my opinion, is the dollar, and the dollar continues to hover here at the highs. Part of it's a result of what's happening in Greece, but part of it is just that the dollar is strong off the idea that the Fed's going to raise rates and everybody else is lowering them. We've had at least 5 or 6 central banks lower rates or lower reserve requirements now so far this year. Fed continues to act as if it's going to raise rates, and that is putting pressure on the prices. If we look at the positives, the positive in my mind is the one we just talked about, which is that we actually got a test failure at the highs on price, but it wasn't on volume, which means we'll probably try to test again on the S&P. We had weekly bullish retest regions still holding. So if we go back to the S&P real quick and then pop over and look at the weekly, you can see this retest region on the weekly still continuing to hold these price points. It has not given it up on any of them, and that's true not only here but elsewhere, and those are very positive scenario. Continuing on here, we've got the Russell remaining over the highs. That's another positive, and the fear seems to be subsiding, and we can see that we can see that with the bonds. If I pull up the bonds here and show you that, we had a pretty good sell-off last week on those. They pressed lower, pressed into these swing point lows and broke them. So on a short-term basis, the bonds have kicked into some sort of a sideways trend. If we look at it on a longer-term basis, it's back into support, coming in there with pretty good volume. Looks to me like it's going to try to get back into this high, 127.68, which was the breakout area, and then we'll actually see whether or not bonds are going to hold up or not. But the fact that these are succumbing to price pressure really suggests that we have what appears to be some lessening, maybe is the word that I'm looking for, of fear. And that is that we're not seeing folks just wildly pile into these as they were before. And that's kind of confirmed elsewhere with like the utilities getting whacked on Friday, with the employment number coming out. That the same has been happening in the biotechs, although they're more speculative, but in the healthcare, a lot of sideways action there, just as we see in the consumer staples. So those safer sectors are getting hit as interest rates rise with the TLT coming back. So that looks to be a little bit of the fear trade coming off. And another way to measure that is to take a look at the junk bonds. And if I look at the junk bonds, they also are trying to work their way higher, which also suggests maybe fear isn't really as strong as it was for the last 5 weeks or so. If I look at the negatives, the fundamental positives, the QE, of course, in Europe, there was also, it wasn't talked about much, but there's been a lot of states increasing minimum wage. We started to see that show up in the employment report on Friday, and that, of course, creates more consumer discretionary money. If you look over at the discretionaries, you can see how they're back up here at highs, pressing new highs. M&A activity, we didn't talk about this much, but all week long there was one after another deals or mergers or takeovers, and it was across a wide spectrum. That usually signals a good scenario, where corporations are willing to take their money and expand through takeovers. The other thing that happened was financials. Financials actually finally traded over. If we go back now, they've been dealing with this bar for quite a while. They traded over it, back under it, but they had more volume on Friday. They're going to try to get over that swing point low and turn this trend, from, it was already a swing point low here that was retested and regened over, but now they're going to try to get over this one that has been the nemesis, which was this swing point high. Had a little less volume, but did get over it and stayed over that swing point high on Friday. The big test here is, can it stay up here? If it does, then the financials are in some large range instead of what they've been in. And that's a big positive because the financials are such a huge part of the S&P 500. Let me see, what else? Those were the main things. On the negative side, the Greek situation is the news flow case, and that looks like it's a week or two from coming to a head. You got to think that somehow or another they're going to stay in the union. There's going to be a stretch out in terms of the time of how they have to repay, and it's going to be business as usual. But that still is going to create volatility until it's done. And then, the economic data still is mixed. It's negative around the world and somewhat mixed here. So I think that is not a positive thing as well. What I would be watching for is can the indexes, in particular the S&P, clear that range high? And if it does, then I do think that we are going to move higher, and we're going to finally start seeing this market work to the upside. And then the other piece of that is, will the Russell hold that range breakout that it already has? And I think those are the two critical things I would be watching for the coming week. If I look at the upcoming economic and earnings, you got a couple Fed speakers again, and then you got a lot of data, but the data is a lot lighter this week than it has been. The GDP numbers that are going to start coming out are probably going to be the next big thing, so I would be watching those. We still have the geopolitical with Ukraine. That's again a news flow situation. It seems like Russia has taken the approach at this point where they're just going to quietly take over Ukraine again. They're going to take over they already took in the Crimea region. It looks like they're going to take the eastern Ukrainian, and they're going to do it just through saying, oh, we don't want to cause problems, and we've got a divided U.S. and Europe. Europe doesn't want to rock the boat. The United States wants to arm the Ukrainians. I think Merkel's actually coming to the U.S. today to talk with Obama and try to get him to keep things from boiling anymore. And that's what Russia wants. And it looks like that's what Russia's going to get. So this may actually fade away again as a result. If it doesn't, and if we don't see, if the U.S., for example, does start to arm the Ukrainians, then this comes right back to the forefront. Bottom line, it appears to me that range trade we've been looking at for quite a while here is very close to being decided one way or the other. Either we're going to break out, or if we make another trip to the lows, potentially break the lows. But this smaller range that's been in effect does look like it's getting worn. We've gone long enough sideways to where more than likely one side or the other is going to break out. And given the way it's set up with multiple swing points, not in this case but on the NASDAQ it is, at either end of the small range, a push through that is going to have a good chance of breaking out completely on the top or the bottom. And if that happens, of course, the size of this move, either way, is going to be large. And so that, of course, is the focus. Can we get over this, stay over it for a bar or two? We've done 2 bars now on the Russell. Russell not quite as important right now. I think the S&P is the critical one. Of course, the NDX is critical as well. But if this one starts to get above the range and stay above it, I suspect the others will go with it. And so for me, that's the one I would be watching, and I think that's the biggest test that's out there. Can this get over it and stay over it? Okay, so that's kind of the bottom line. Let's see what else. The structure's in place, and we're totally driven by the news. And that's an important point. You need to realize that it's totally news driven right now. You got the oil, spiking and dropping multiple percentages every day. You've got the potential for Russia to flare up again with Ukraine. You've got this news out of Greece, even though it's kind of a sideshow. The fact that it is happening, and there's the potential for Greece withdrawing from the EU, which would say that the EU is not guaranteed to stay as is. That changes the picture if that happens, and that's why I think that something will be worked out. But in the meantime, you got a lot of news flow, and you've also got economic data that's kind of muted. You have the potential for the Fed to signal higher rates and the dollar to start surging again. There's just a lot of news flow taking place, and that makes for a very choppy market. And we've seen that, and I suspect that's going to stay true until that range is broken. And when the range is broken, expect high volatility on the breakout, and then some sort of just claw in the direction of the break. And at that point, if we break to the top side, the volatility will decrease dramatically. If we break to the north, to the south, then it will probably stay high until we make a bottom. On the portfolio, as you know, we have been trying to position in the stronger stocks for a while now. And I continue to think that is what we should be doing. And if you're not doing that, then you're probably doing yourself a disservice. Even though we're doing that, we've basically avoided all this volatility. I mean, our portfolio, changes, 0.3, 0.4. It's not changing 3 and 4% a week, like the NDX and the S&P and so forth, which are huge moves, by the way, weekly basis, in and out, 9 weeks now. That volatility, we've kind of stayed aside, eking out some very small profits, basically rotating into stronger things like Apple, like UNH. If we go down the list, most of these are post-earnings. We have our core positions, but all of these are allowing us to stay above the fray, so to speak, and keep our position size at a respectable level, with the ideal that we have to keep leaning long. This week it looks more like we're going to try to break to the top side, right? We failed at the test of the price on the S&P, but we had higher volume, which says we're going to try again. If we break top side, you want to have exposure, and you want to have it already on. But you don't want to dig a hole while you're waiting. And fortunately, by rotating into stronger stuff, stopping out of other things or taking things off, has allowed us to continue to keep good names on the board for the most part. And if this market pushes higher, then we'll be in position with a good portion of our portfolio invested and taking advantage of that push up, and then we'll naturally want to jump into some more. But we can't do that until we get a break higher, and so far we haven't done it. I'm not going to go through all of these. Apple, you can look at, it didn't break over that swing point high we were looking for. That's unfortunate, but it may in time. UNH came back on a retrace. We bought it. It's still kind of hanging there. FNV we bought on the notion that it was going to break out. That one is is a great looking stock that over a long period of time has held up extremely well. Like, here's a monthly on it. Has held up extremely well compared to gold. I mean, gold's down here. FNV is up here at the highs trying to break them. So, if we're going to have some gold exposure, I want it in the strongest stock, and that's why we're in that one. NOW, this is a new play that broke over all 3 time frames last week, and I covered that when I talked about it. So it's breaking over on a monthly, although the month's not done. It broke over on the weekly already, and of course it broke on the daily, and that's post earnings. And so all those things gives us a pretty good indication that this might be a good spot to be, and that's why we bought into it. AYI still looking good. This one's up at the highs. Again, these are post earnings plays. We go into these with the knowledge that they're going to give us potentially a nice rise, and they don't have a lot of risk, which is of course why you want them. And that's this one's still hanging here at the highs. Asher, that one hasn't done as well. That's of course China. That one's a lot of volatility, like we talked about, big range. That one actually could retrace even lower. XLP, I was going to push some out last week, but I actually held on to it, and we got our price point finally on Friday. I'm torn whether I want to push this out or hold it. It still looks okay, so I don't think the risk is bad. If we add other names, then we'll probably rotate out of this until we break out of that range on the S&P 500. NXPI, this wasn't earnings. We held into earnings. It's got a nice bump coming off of earnings. If it presses over these swing point highs, both of them, and then retraces, so in other words, if I take this last swing point high here, if we can get over it and then come back in, the buy to add is there, and so that's what we're waiting on now. So we have a nice position, nice size, I think about 4.5% or 5%, and most of that is up 14%, some of it up about 4% already. So that's a nice setup. AUK, this one's coming back on earnings, on the weakness in the utilities. Earnings are coming up on it. There's nothing to do but wait. And if we look at the last one, ZLTQ, the little bread and butter stock, it actually spiked, hit our 34 number. We took some profits again, and it spiked almost to 36. Earnings coming up on it. If it fades back into the 30 area, we want to buy. If not, we simply want to wait on earnings. If you want more exposure, if you don't have enough of your own exposure on, or maybe some of these names you didn't like and you didn't buy them, and you're wanting and looking for greater exposure, please take a look at the list that I share with you. So if I pull over, the TA Today site, I'm going to pull it up here, keep it wide so you can see. Over on the tools, if you come into the watch list, right, there's two sets of watch lists that I share with you. And so if I go into here, there's these which are earnings dash something. I keep 3 months rotating. As earnings come out, I look at the earnings and I pop them in here and place them on this watch list for you. If it's bullish, it will show up here. If it's bearish, it will show there, the earnings date, and then the other data gets appended to it. If you pop into here and hit the help button, and then the shared watch list, if you go into that, you can see what all those, there's a video you can watch, but you can see what those contents are. You can use that to get, to pull that data down, put it into a spreadsheet for yourself, and then use it, to sort and find stocks that you like. So if I go back into the watch list, if I open it up, and if I say, I just take them all and do a download, it's going to pop up a download for me, save a file. I can save that file. Once it's saved and it's in a folder, right? I pop it into this folder. Now I've got this CSV. If I pop up my Excel spreadsheet, I can import that stuff into a spreadsheet. And when I import it into the spreadsheet, I can then take and put this into any order that I want. I can filter. And so in this case, I filtered on, let me see, on this case I filtered actually on short interest, and I put them in reverse order and said, okay, which ones have the highest short interest? Because I was curious to see what they looked like. And now that I have them in that order, I can actually just grab this list, Control C, right? Come back to my watch list. I can create a temporary watch list for myself. And then I've already got some stuff in here, so I'm going to remove it all. And then I'm just going to come right here to this, do a Control V. All those symbols get stuck in there, add them. They're all here. Now I can just start flipping through them. I can show all charts, and I can quickly flip through every one of these charts and see what they look like. Folks, the tools are here to make it very easy for you to keep a list of what you want. If you want to just follow me, that's great. I mean, I do my best to find the best stuff and to keep a portfolio that makes sense. If you have time and you want to do this yourself, the tools are in place. Once you have this watch list, you can sit here and click right through it, one after another, and flip through them all in a very short period of time. Most of these stocks, if you look at them, you're going to see most of them are still hanging at their highs. They're all post-earnings plays. They have a high probability of doing that for the next 2 to 3 months. We'll leave it at that for this week. Hopefully that helps. And as always, I'm here for you. Let me know if you need help. I'm LA. That's it for today. Have a great one. Thanks. Take care. And I'll see you next time.